Welcome back to the Hunter of Dividends YouTube channel. Taking a look at another dividend stock, Lowe's Companies, ticker symbol LOW. This is a very popular company, market cap 134 billion. This stock's seen a pretty big pullback here of late. I'm surprised at the speed of the pullback here in the last 6 months. We go from 263.31 for the 52-week high all the way down to 198.50 here today. I'm buying here at this point. I already own Lowe's at a slightly better price than this, but I'm going to buy some more. Already have been buying some more and will continue to buy some more of Lowe's. I think this is a really high quality name. Let's take a look at a few metrics here as to what I believe would be important to the overall picture for Lowe's. Stock price, like I said, 198.50. Current yield 1.61%. Not a huge yield for Lowe's, but this is still better than deposit rates that you can get today. Certainly, the Simply Safe dividend score 93, so a very safe dividend here. I really recommend Simply Safe Dividends. A great product. This is a Dividend King, 60 consecutive years of growth. Last 5 years, average dividend growth 18%. Massive acceleration of dividend growth here. I think this is the most important metric we'll look at here today. The dividend growth, this company is really starting to pay out the dividend at a higher level, and they have plenty of room to continue to grow. As you see, the payout ratio, 25%. Anything under about 60% shows room for growth, and below 50, major room for growth. Here we are at 25%. The free cash flow payout ratio, also 25%. I think Lowe's is going to continue paying a much higher dividend here in the coming years. So I think if you buy this soon, your yield on cost is going to be very impressive here in a few years. Like I said, the 52-week high was 263.31. The PE ratio for 2022 expected earnings, 14.75, which I think is more than fair for a company that has been as financially strong as Lowe's. Operating margin, 13%, which that has been increasing here lately. So impressive signs there for Lowe's. Let's take a brief look here at Lowe's when it comes to the research. This is CFRA giving it a 4-star recommendation, a 12-month target of $275 per share. That may be a bit aggressive, but as a dividend investor, I'm just looking for increasing dividend and slowly appreciating assets and stock price. I think that's what we'll get here with Lowe's. Simply Safe Dividends shows you the dividend growth here. Most recently, 33% increase in dividend, just massive. It's a low beta stock. I don't think this one's very risky. The dividend streak, which is 59 or 60 years, depending on the source that you look at. Last 20 years, 24% dividend growth. Look at this dividend growth chart, just massive here over the last few years. Annual payout $320. This is going ex-dividend April 19th. So if you're watching this one right away, pay attention to that because you have to own it before the ex-dividend date to be paid in this cycle. This stock, 5-year average PE, 17.9. Right now we are at 14.75. So it is trading cheaper than it has been. I also wanted to point out the earnings per share chart. You see this one is just consistently going up. Very impressive growth. Even during some economic slowdowns, this company has done a very good job with earnings growth. Now, it's certainly not going to be what it was in 2021. Rates were so low. Sales went through the roof there as many people were building new houses or remodeling. I understand there are some risks for Lowe's with the mortgage rates going up. There is a possibility of when the rate increases hit that there could be a recession at some point. Certainly there could be. I think this is a really good long-term name. I think there are risks to every single stock. I think the benefits here outweigh the risks by a large amount. Really like Lowe's quite a bit as a long-term name. Like I said, this is not a short-term look. This is one that I'm looking at for the long term. And if you look at the max chart here on Yahoo Finance, just a really impressive company that doesn't have very many huge pullbacks. I mean, certainly there are going to be pullbacks, but this is one of the bigger pullbacks we've seen on Lowe's. I think for a quality stock like this, if you're looking for dividend growth, I think this is going to be a great dividend grower long term. So I definitely recommend Lowe's. Seek financial advice if you're looking for specific advice on your own portfolio. But this is a stock that I like a lot, and I'll continue buying it for myself. Do your own research, see if it fits your portfolio as well. But Lowe's companies, I'm buying on these dips. I will continue to buy this one here as we move forward. Follow me at Hunt Dividends on Twitter. I hope everybody has a great day. We'll see you back soon for some more dividend stock analysis.